Hello, my dear students. Now, in this session, we are going to consider Board Paper 2009 on the chapter of retirement, partnership, retirement of a partner, and the Board Paper 2009, just after 2008. Last class we did 2008. Now, this time we are going to consider Board Paper 2009. This is our problem. Here also three partners A, B, and C, and their profit sharing ratio. It is under their proportion of their capital investment. Here it is, their capital is provided 90, 60, and 30. So what will be the profit sharing ratio? Simply we can say here 90, 60, 30. That is here 3:2:1. That will be their profit sharing ratio. Directly profit sharing ratio not mentioned in this question, but it is indirectly mentioned that A, B, C in the their profit sharing ratio in the proportion to their capital. So it does mean that capital investment from here you have to calculate. Now after that their balance sheet as on that 31st March 2008 are as below. All are known term, building, machine, stock, debtors. There is a provision is there, provision for doubtful debt. All debtors are not good debtors. 20,000 is gross debtors, 400 is a provision maintained. So net debtors here 19,600, cash balance 16,000. Total of the assets at 2,01,600. Liabilities also same. Now let's see who is going to retire among A and A, B, C. So here is the further information. Now on the update, B is going to retire. B, the second partner, due to his ill health, do not want to continue, want to take the retirement, and at the time of retirement, these are the changes take places regarding their assets and liabilities. First of all, building will be appreciated by 10%. So here we know all the system 1 lakh, thereupon 10%, 10,000 building value increases. Provision for doubtful debt to be increased to 5%. So here is the debtors value, gross value always will consider while calculate new provision. So 20,000 thereupon 5%, it is coming 1,000, but old provision 400, so 600 it is increases. Any one method we can adopt. Machinery be depreciated by 5%. So machinery is provided here 48,000, thereupon 5%. We have to calculate 15%. Machinery 15%. Now this is the term that related the goodwill. Value of goodwill on the firm, value of goodwill is considered rupees 36,000, and that will be adjusted among the remaining partners in their capital under their gaining ratio. Here it is new ratio is provided, like remaining partner new ratio provided. So new ratio when it is provided, so we must have to calculate the gaining ratio. We know the formula like how to calculate the gaining ratio. NR minus OR, that will give the gaining ratio. So that is our first duty, to calculate the gaining ratio before going to show the treatment of goodwill. Now after that, a provision be made for outstanding repair bill rupees 3,000. No such type of bill is there, so it is a unrecorded liability. We know how to deal regarding the unrecorded liability as well as unrecorded asset. Revaluation account debit to. Here another thing regarding the debtors, like included in the value of caiters. Sorry, not debtors. It is a caiter included in the value of caiter of rupees 1,800 for an outstanding legal claim which is not likely to arise. Very simple. This type of treatment you already did. Like ultimately here caiter value decreases. No need to pay 1,800 rupees. It is good for the business. Like here liability decreases, payment is not required to pay. Now one more item, out of insurance premium paid. Like here it is not shown. It is the balance sheet. So insurance premium generally it was shown on the profit and loss account. So from that account, this is the mistake made. Like here, what is the mistake? Out of the insurance premium paid rupees 2,000 is for the next year. Like insurance premium paid may be 12,000 or 10,000, whatever may be. So from there here 2,000 which is paid, that is for not current year, that is for coming year. So it is ultimately we can say prepaid insurance. So when any expense is prepaid, we know it is converted to the asset. Here expenses are not remain expenses for that year. That year purposes it is like converted to assets. So ultimately it is asset increases. More information are there here. The amount was debited to profit and loss account. So that was a mistake made by the accountant. Like we know how to prepare profit and loss account. Like when you prepare the profit and loss account, that time generally that particular year exact amount we have to consider. That is why it is mentioned that all trading PL are prepared under accrual basis of accounting system. Accrual basis of accounting system, it does mean prepaid outstanding we have to consider. If prepaid, then it will be minus. If outstanding, that will have to add. Mainly we have to consider current year amount. We cannot consider last year, we cannot consider coming year. If that is included, that we have to exclude by doing plus or minus. So here in this cases, like 2000 should have to deduct. That time it was not deducted. So how do you deal? This is new type of transaction, and this came on a particular year, that is 2009. So therefore this type of transaction may can come in our coming exam. So you have to remember. So shortly we just have to remember. So when it is expenses and that is prepaid, so we can say it is converted to asset. So it is unrecorded asset. Like that way you can deal unrecorded asset, like prepaid insurance account debit to revaluation account. Now one more information. The partner decided to fix up the capital, that is new from 1,20,000 in their profit sharing ratio, but this part not in our present syllabus. This is excluded. Like adjustment of remaining partners capital is not there. Opening retiring partners loan also, it is excluded in present syllabus. So therefore this point won't consider. Therefore I mentioned in the red. So it is excluded. Next, last point, like regarding the retirement, B to be paid rupees 9,000 in cash and the balance is to be transferred to his loan account. So this is our like included in our syllabus, that payment to the retiring partner partly by cash and partly transferred to his loan account. So this is our problem. Now we will go for solution. Here it is instruction part, revaluation account, partners capital account and revised balance sheet. You have to prepare first, like revaluation account. So these are all related to building increase 10,000, caterers decrease 1,800, prepaid insurance related to that adjustment which I told here. Regarding this is the new adjustment. Whenever that type of adjustment is there, we have to consider it is unrecorded asset and we have to consider on the credit side of the revaluation account once, another time on the asset side of the new balance sheet. So therefore by prepaid insurance 2000, this is appeared on the revaluation account. Now here regarding the provision for doubtful debt, we made that adjustment one, like new is greater than the old, new provision coming 1000, old is 400, therefore 600 net amount which will come two side of the revaluation account. Machinery value decreases, provision for outstanding repair bill, that is also unrecorded liability, this side came. Now after that, this is the credit side figure and this is the this is the debit side figure and this is the credit side figure. Total of the credit side came 13,800, which is greater than the debit side. So 3,000 more, 3,000, therefore it is a profit. Credit minus debit profit, we know how to calculate profit on revaluation. 3,000 profit arises and that is being distributed among the all partners including retiring partner in their old ratio, and that ratio is 3:2:1. So this is their share of profit on revaluation. Now next step, we will prepare to find out the retiring partners loan as well as the remaining partners present capital balance. So this is the partners capital account, that is like next step, quite important step. We know how to prepare it. By balance BD, opening balance, it is provided 90,000, 60,000, 30,000. Once we can check here from our old balance sheet, here is that 90, 60, 30. So by balance BD in partners capital 90, 60 and 30. Revolution profit we already seen here. Revolution profit 1500, 1000 and 500 by revolution. By this is related to treatment of goodwill. This one reserve. Once you see reserve in the old balance sheet, here is the reserve. Yes, this is the reserve. Reserve amount 6000, which you have to distribute among the old partner in the ratio 3:2:1. So by reserve 3000, 2000 and 1000 in the old ratio, and this part related to the treatment of goodwill, remaining partners to retiring partners. So by remaining partner, by S capital, by C capital, they are remaining partners, and amount goes to retiring partner. Then you have to post the contra entry to retiring partner. Amount goes to remaining partners like A's column, C's column. We know this statement. After that, we'll calculate the retiring partner total benefit. Total benefit coming 75,000. But in the question mentioned 9,000 will be paid in cash and balance will be transferred to his loan account. So therefore here 2 cash 9,000. 75,000 total payment out of the 9,000 paid in cash. So remaining transferred to his loan account. So therefore 2 biz loan, biz capital to biz loan balancing figure 75 minus 9, 66. Exactly same you have to calculate. A and C's balance is total credit balance 94500 and C 31500, and here also this related to goodwill treatment purposes will be deducted. So new balance will be 85,500, here 28,500. So that way this part will goes to the new balance sheet. This and this will be minus from cash. 2 cash means cash is being out from the business. If it is by cash, then cash is in, it will be plus. If it is 2 cash, that means cash is being out, it will be minus. Now we'll consider the new balance sheet of remaining partner A and C. Regarding the cash working notice there, like 16,000, it is a old balance of cash. Yeah, this is 16,000 old cash balance. After that, we make payment 7,000 to the retiring partner. To here 16 minus 9, 7,000 came. Now these are all revalued figure. Gross status 20,500. New provision, always you have to deduct new provision 1,000. So here it will be 19,500. So integrate it will be 19,500 will be. The stock will be 18,000 revalued figure. Prepaid insurance, that was like insurance paid in advance 2,000, that will come on the asset the balance sheet. Now machinery, after depreciation, it is coming 48,000 minus 7,200, 40,800. Building 1,10,000 after revaluation. Now after that it is coming this side 1,96,800. Exactly on the liability side also will be that provision for outstanding repairs, that is unrecorded liability, newly appear here. Creditors like 1,800, no more required to pay. It is a benefit to the business, so therefore it will be deducted. Decrease of creditors here, now new creditor here 13,800. Biz loan like retiring partner, entire amount not being paid, so therefore biz loan it is 66,000, and this is the new capital of the remaining partner which you got from here, partners capital 85. This is the new capital. Now after that, total of asset and liability are tally. Once the working note is there regarding the treatment of goodwill, full value of goodwill 36,000. Like out of 36, retiring partner here 2 by 6. So it is coming here 12,000. So that is this share of goodwill, and this 12,000 will be by the remaining partner in their gaining ratio like A and C. It will be C. It will be C like A and C. The gaining ratio is 3:1. So on that basis, the goodwill is distributed here. The entry here on partners capital like by S capital 9,000, by C capital 3,000, and this side to this capital A and C's column. Now regarding number working two, that is cash balance like 16,000 old cash balance and 9,000 paid, so 7,000 is new cash balance which appear in the new balance sheet 7,000. After that, both the side is tally. So this is not new, only one adjustment regarding the insurance premium. That part you have to note it properly. This type of any expenses if prepaid, that will come on the asset side. Once on the new balance sheet, again it will goes to the revaluation credit side. So this is the solution for the year 2009. I think so it will help to the learner to solve such type of problem, and will consider more problem like subsequent year 2010, 11, 12, like that year. But here like admission, each and every year retirement problem not came. So which is year ultimately came, that year will consider in our like topic. So next day we'll consider next subsequent years. Now I'm going to conclude this session. Thank you very much.